We are expecting prices to continue to rise across our major capital cities, but that price growth is really going to be led by Sydney, and we're going to see Melbourne even moving to a pricing recovery. And even in those hot markets such as Adelaide, Brisbane and Perth, where they've really been overperformers in recent years, we still are expecting price growth over the next financial year. Obviously, a reduction in the cash rate does improve borrowing power, and when you look at a 100 basis point reduction overall in the cash rate, it means that the average Australian can borrow about $100,000 more.
Do you expect to see prices retreat anywhere?
We're not forecasting any declines in prices overall for our major capital cities, but what we are expecting is much slower rates of price growth coming out of Adelaide. The slowdown in momentum is very evident in Adelaide as well as Perth. We've got to remember that these have been very hot markets over recent years, and there is still a little bit of momentum in these two housing markets, but I really think affordability is starting to catch up with those markets.
We should touch on Domain's forecast that annual gains for houses in Sydney will exceed the annual average full-time earnings in 2026.
When your home is ultimately earning more than what your income is, it really does place things into perspective. But I think what it also does show is it's leaving a lot of first home buyers behind, because when you've got a figure like that, it's really hard to keep pace with the housing market. I think with Sydney though, affordability issues are really entrenched in Sydney's housing market, and we've got an expectation that house prices are actually going to surpass $1.8 million. And also we tend to find that when the cash rate is reduced, it seems to be amplified through our bigger, more expensive capital cities quicker than others. And so we're expecting Sydney and Melbourne in particular to react to that reduction in rates and the further reductions that we're expecting for this calendar year.